Once it was the darling of fund managers. It was trading above 40 Rand a share. It had a dividend yield of 7%, and people couldn't get enough African Bank shares. Well, today, African Bank share price has seen a phenomenal fall. Its chief executive, Leon Kirkinis, has stepped down with immediate effect. And joining me to discuss the rise and fall of African Bank, Jean Pierre Verster from 361 Asset Management, and Matthew Warren, the head of financials, retailers, and also partner at First Avenue Investment Management. It was a couple of weeks ago when I spoke to Leon Kirkinis on the show, went to the call center in Midrand and said to Leon Kirkinis, so far so good. The institutional shareholders seem to be backing you. Coronation with 22%, Standard with 8%, the Public Investment Corporation with 15%, and Sanlam with 5%. They control the business, the institutional shareholders. Will you be running this company 2 years from now? This is what he said.
I believe so. I mean, I obviously serve at the behest of the board. I am committed and passionate about this business, and it's in a tough space, and I've got the energy and commitment to get it into a better place. One must always recognize that you have to be relevant, and you can't be arrogant and assume that you're here forever. It's up to the board and the shareholders to decide that. In this period that we've been in, as you say, the board has been unanimously committed towards me, and so have the shareholders.
Well, that's turned out kind of differently to what Leon Kirkinis suggested it would when I spoke to him in June this year. To discuss the rise and fall of African Bank, Jean Pierre Verster from 361 Asset Management, and Matthew Warren, the head of financials at First Avenue Investment Management. It's gone all horribly pear-shaped very, very quickly, hasn't it, JP?
Well, it's gone very quickly, very slowly, I would say. We saw some signs 2 years ago that there are some issues at African Bank. I think what you saw in that clip also is that Leon, and not just him, but the broader management team, are not necessarily in touch with reality and actually the dynamics in the industry and how things have changed recently, from regulations, from consumers that are over-indebted, from the type of accounting principles and policies that they have that they needed to adjust. So it's almost like looking at a slow train wreck.
And the train wreck happens slowly, and suddenly, and the train wreck is hit. Matthew Warren, what's your take?
It's similar. So when I was listening to Leon over the past couple of years as the problems emerged, it seemed that either he didn't have a handle on what was happening in real time, or he was trying to put a positive spin on it for investors and funders. Either way, it's a bit troubling. He kept saying everything would be better kind of in the next half. And he's
but has he been lying to investors? Because every quarter, every 6 months, he keeps saying, this is the last capital raising, this is the last problem, the worst of the bad debts are through the system, we've extended loans, we've lowered interest rates, we've raised interest rates, we've shortened loans. People got pretty tangled in the amount of information that was coming out of African Bank. Was he lying, or did he not have a grip on it? Both are equally bad.
Yeah, I think either one's a problem if you're a shareholder or a funder. But to me, it seems like there's a balance, right? Because if you're a bank, you need the confidence of the markets to fund yourself and to carry on. So you have that responsibility. On the other hand, the spin was so positive, it really defied reality unless you're incredibly optimistic. So I don't think he found that balance.
But institutional investors have come in a big way. Coronation owns 22% of it. The Public Investment Corporation, 15% plus. Sanlam Investment Management, 5%. Stanlib, 8%. Together, if my maths is right, that's 50% of shareholders, big institutions who could have, should have, would have known better?
I think they should have. I mean, all the information was there. African Bank were very transparent. They gave enough information. If as an analyst you went through the detailed information, you would have seen that their policies are out of line. One of the things that they announced today is that their policy for when to classify a loan as unperforming needed to be adjusted. That has cost them 3 billion Rand of additional provisions, for instance. And they showed the deterioration in the loan book. Everything was there. Some analysts, for some reason, still took that positive spin that Leon maybe put on it and said, well, maybe it's not that bad, things are turning, even though the data did not show that. And that is partly why institutional shareholders have supported African Bank, have been burnt, have been disappointed, and now they say they want to do another 8.5 billion Rand rights issue.
Who's going to follow it this time? If you are a Coronation, you want to follow your rights on this one.
Well, do you, Bruce? I think that's an open question.
Why would you not want to? Because if you don't want to follow your rights, this business is bust.
Yes. So firstly, the tangible NAV before all of this was roughly R6.50 a share.
Yeah.
They're going to make a loss of at least 7.6 billion. That will bring the tangible NAV to R1 a share. So after the write-downs they've announced, that's the value that's left in the business, R1 per share. A rights issue will need to be at a discount to that. That is extreme dilution to shareholders.
So you need to issue more than 8 billion new shares, probably
Correct.
10 or 12 billion new shares in
Correct.
order to do this.
And I think a lot of shareholders will not have an appetite for that. That is why I think the regulators will need to get involved here.
Why do regulators need to get involved? Because when you go to the Sambo story, Sambo was a deposit taker. Deposits were at risk. African Bank, one of its great weaknesses is it's not a deposit taker. So deposits aren't at risk. Why would the banking regulator care?
Even though they're not funded by the retail market through deposits, they are funded through the wholesale market, through commercial paper by the likes of money market funds, pension funds, life assurance companies, and those investors have got something to lose. And even though those investors are institutional, behind them are retail investors that have put their money in money market funds. So the regulators will probably want to protect those investors.
But how do you protect these investors if there's no NAV left to protect them, Matthew? I mean, if you pull the rug out from under African Bank at this point, that money is gone and gone forever.
Yeah, I mean, I think it's true with any bank. It's a levered financial institution. If at any point in time there's a judgment that there's not true equity capital in the business, the lenders will stop lending. And that's why confidence is so important. That's why it's important to have a cushion in terms of provisioning and in terms of tangible equity capital. We have a problem on both fronts here. So, I mean, there's a question on how big is this problem? I mean, the NPLs are coming in at a very rapid clip.
Yep.
Supply keeps coming out of the market. When the supply comes out of the market, the NPLs step up even further. So we don't know how big this hole is. The other problem is, what are the normalized earnings of this company? Anybody that thinks they have an answer to that with any kind of confidence, I would be extremely skeptical of that. No one knows.
I do love the 2020 hindsight, because 2020 hindsight provides all sorts of magical answers. And you go back 2 years to when the trouble started brewing. African Bank was trading at $40 a share, 7% dividend yield. It was a no-brainer. Fund manager was chucking money into it. The dividend yield was fantastic. But the big banks, which had gone into this market to capitalize on the huge interest rates that you can charge on unsecured lending, were pulling back. And as they started pulling back, those bad customers from those institutions would have come to African Bank for the loans. African Bank continued to lend. And that's where it all went pear-shaped.
Correct. That's part of the problem. And I think, once again, African Bank was the place where it was easiest to get a loan. So their criteria was maybe the laxest, if that's a word.
The most lax.
Yes. So indeed, the quality of their loan book is the worst. You add to that the policies that I touched on previously being not as strict as the other banks. That is a recipe for a disaster once a market stops to grow. That has happened. The regulators are capping credit life. We're looking at new accounting policies to go to expected losses, not just from incurred losses. And all these elements create a recipe that some did see it 2 years ago, and some were public in their criticism of African Bank. We've been shorting our hedge fund for 2 years now, African Bank shares.
Finally, it's paying off.
Yes, so it's worked for us.
Yeah.
We don't take any pleasure in their demise,
absolutely
but the facts were
You
there.
use the word demise. This is not a business that's gone yet.
I think you can see what my expectation is, Bruce.
Yes, no, absolutely. You're calling the end of it. What's the best case scenario here, Matthew?
I mean, it depends on which constituency you're talking about.
You're a shareholder in African Bank.
We are not.
No.
Yeah.
One is a shareholder in African Bank. You bought the shares at 40 Rand because stock pickers on this and other channels were saying the dividend yield is a no-brainer. You've got to own it. So you bought it at 40 Rand, and being a private shareholder, you don't want to panic and sell. And the share price has gone from 40 to $2 something today. What's the best case scenario for you as that shareholder?
I guess if you're an individual and the institutional shareholders pony up another 8 billion plus Rand of capital, it gives you a chance to try and find out what normalized earnings might be, or really in the next lending growth cycle 7 years from now, what kind of earnings can they get to then if they survive? But in all honesty, as a long-only investment house, we wouldn't touch these shares. And we haven't touched them. I wouldn't recommend it.
You wouldn't even take a bet at $2.50?
No, absolutely not.
That's an indictment, and it's a very severe indictment. So how do you see this one playing out then? How does this play out?
I would say most probable is there's a good bank and a bad bank that gets created. The loan book is split between those two. The Reserve Bank and the regulators give funding lines for the bad bank, and that gets ring-fenced. The good bank then survives, but equity holders get wiped out, and one of the big four banks buys the good bank, and that gets some support. It's probably an open question. Maybe one of the big four banks that feels that they would benefit from the call center distribution footprint that African Bank has, that feel that they are underweight in unsecured lending, and that would create an opportunity for that portion of the business to go forward, while the bad bank will be in rundown, and Ellerines could go to the wall, and maybe one of the furniture retailers picks out some of the better leases and better stores within that.
How did such a great entrepreneurial story go so bad, Matthew? I mean, this thing starts out as theatre 23 years ago. The guys get together, Gordon Shachat and Leon Kirkinis get together. They ride the crest of the wave. They survive the 2002 banks crisis. They emerge from that stronger than, better than ever before, and microlending is the future. Leon Kirkinis swears down to the depths of his heart that microlending is the only option for South Africa, because microloans provide the capacity for South Africans to build their homes. Boy, it's a great story, and it's just gone pear-shaped.
Yeah, I guess on the one hand, if you ever see loan growth for a period of time that's growing much more rapidly than nominal GDP, you should be on high alert as an investor. That almost always leads to bad situations down the road, because it might be an opportunity at the beginning that's attracting people, and then you get to a point where you saturated the market, and then it usually carries on beyond that, and that's what happened here. And the other part, I mean, the apple pie story around unsecured lending, I mean, it's a farce. I think maybe 1/10 of these loans were taken for the right reason. If you're going to spend this much on a loan and you really need to do something for your family, like, sure, that's a reasonable thing to do. But if any of it's on consumer spending at these kind of interest rates with the credit life attached, the effective interest rate is so high, you're really just stealing your future earnings. No, it's not a great business. It's not one you'd like to see grow in an economy.
Anybody who owes African Bank 5,000 Rand at 30% interest per annum is sitting rubbing their hands saying, yes, I'm debt-free. The government's going to come after you. Whoever runs this book into the future, those loans they're going to come after the loans at some point.
Exactly. That's the moral hazard risk that the regulators will avoid. They'll not allow the bank to go to the wall and for people to think they can't pay back their loans. If you've got a loan, you still need to pay it back. You still have an obligation for that. The regulators will make sure that whether it's African Bank or a new company, someone will keep on recovering those loans.
It's a fascinating story, and it's a gloomy outlook for African Bank, reflected in the collapse of the share price today following the resignation of Leon Kirkinis, the announcement of a new 8 billion Rand rights issue. And when you look at the story of African Bank, it looks like it could be headed for a very messy end. Jean Pierre Verster from 361 Asset Management, and Matthew Warren, Head of Financials, Retailers, and a partner and Executive Director at First Avenue Investment Management. Thanks for coming in. Thank you for ruining my evening. There'll be more tonight, tomorrow. Till then, bye-bye.